Hey, what's up, my crypto friends? So, today's video is going to be about how to navigate the bear market. Now, I know a lot of you are in the same boat that the crypto's falling out of its backside. You know, the panic, the fear, the FOMO. But is this now the time to panic? Or is it now the best time to accumulate the bags that you want for the next crypto bull run? Because it's only when the crypto levels are cheap like this that true millionaires are made. So I've put a little video together of how I think you can navigate the bear market, the key rules of to doing this, and what I genuinely think is going to help every new seasoned or someone that just don't know much about investing get into the crypto world. So without further ado, let's get into the video. So how to navigate the bear market? Well, the overview is we're going to look at what causes the bear market. So I'm going to give you a brief detail on what I think and what other analysts have been saying, and I've accumulated together what causes the bear market. Also, we're going to look at how do you navigate the bear market with this doom, gloom, fear factor, you know, the world come crumbling down. How do we navigate through it, come out of the other side smelling of roses? And when is the bear market expected to bottom? What are the analysts saying out there? What do I personally think? And hopefully you can comment and let me know what you think. And last but not least, when should you start investing? I'm going to give you my views, reviews, and overviews of when I think it's a good time to start investing, how to invest, and what we should be looking to do. So what is causing the bear market? Well, as you can see here, the current bear market can be largely attributed to the Fed. Now, this is down to interest rates. We know we've had a lot of things come out, as you can see here, about COVID, but in June, the interest rates peaked to 9.1%, and it slowed down to about 8.3% in August, but it's still massively high, and that has put a squeeze on everything. So the tightening policy involved removing all the COVID-related quantitative easing programs, which were successfully completed in March, followed by an aggressive series of interest rate hikes, which seen the rates go from 0.1 to 0.25 in March to a currently whopping 3.25% level. Now, what does that mean for everyone in the short terms? If you just want me to kind of simplify it down, is everything's getting squeezed. Interest rates being high like this is putting a lot of fear in the S&P 500 market, which crypto does tend to follow. So the money is not being released yet to invest into these funds. So this is personally what I think is one of the key contributing factors to the bear market. There is a lot of other factors in there that we always have crypto bear market after the big blow off tops of the bull run, because of obviously the Bitcoin halving. But for me, you have to look at what's going on with obviously the oil prices, the energy prices, the squeeze from the war in Ukraine, but also how the Fed and how the governments are looking to deal with this, and also what they're trying to impact on, and especially in the crypto market. So how do we navigate this bear market when we've done all this? Well, as the bear market approaches the bottom, which I generally think it is, valuable assets like Bitcoin, tech stocks, and real estate stocks are all beginning to look cheap. Now, that's what I'm saying. Now is kind of like a fire sale, and it's probably a good idea to start beginning to research into building a watch list. So what we need to start looking at now is getting your top alts that you've always wanted to get into. If you're new to the market, looking at probably the top 10, the top 20, and the top 30, seeing which ones are good for you. Maybe even just go on to TradingView, a free chart, and have a look how they've been trending and what's a bottom price, what was the all-time high, and where you'd want to get in, and how many X you're going to get before we get to new all-time highs in the next bull run. Now, good strategy to invest. Again, this is not financial advice. This is just me being nice. At this stage in the bear market involves dollar cost averaging. Now, I know you hear this a lot, but it is absolutely important that you do dollar cost averaging, because there's an high conviction assets that are cheaply priced. This involves buying small amounts, not blowing all your money into one, but small amounts at regular intervals, say monthly or even weekly. When it's done consistently over a period of time, this tends to be the best method of investing, and the investor achieves a fair average acquisition price over the course of the time you're investing. So when do I predict that we'll start the bull run? So I think we're going to start seeing the bottom pretty soon. If not, we're already there. So I predict in the next 3 to 6 months, obviously 3 months left of this current calendar year, and maybe starting into the first quarter of next year, because some of the top analysts are already saying that they've got about 3 months and that the bottom of the Bitcoin is already in. Now, I personally think judging from the time in the market, and I've been in the market since way before 2013, and I've seen so many crypto kind of pumps do, you'll always have what's called the flushing out phase, where you'll see a scammy wick down, it'll drop down to super low levels, and that's the exchanges liquidating people, the market makers liquidating people to buy everything cheap, to ride this wave all the way up. So I think we could even see levels wicks down to around the 16k mark, whether it's the high 16 or the low 16. Obviously, I don't have a crystal ball, but for me, before the pump's ready in the next halving, which is 2024, 140,000 on March the 2nd, I think we tend to have a good rally before we get into that stage, because people want to front run the crypto market. So let me know in the comments what you think, but I think this is the best way you can look at probably navigating the bear market at this stage in the process. We have to start playing smart. We have to start looking in how we front run this, how we get ahead of the game, how we get ahead of the FOMO, and what we can do to chase what I always say, the tailcoats of the smart money. So when will it bottom? Well, that's the $1 million question. And the logical approach, in my opinion, is you need to look at the signs of what's happening around. There's a lot of factors that can cause the market to bottom out. Now, this influence changes with fundamentals, as I put here, that are driving the bear market. For instance, the closely monitoring of the rate of inflation. You can go through this. If you want a copy of this, leave a comment. And if I get enough comments on this, I will put a link and put this slideshow available to the people that want it. But for me, I'll be looking at this to bottom when I start seeing a change in the market. See, when inflation drops, it says towards the Fed target of 2%, the Fed may be forced to stop tightening, and this could lead into another bull market, because the Fed then wants the economy to start growing again. So we could see the green shoots of the bull market starting to sprout out. But you also need to keep a key focus on the oil market indicators, because low oil prices could mark the bottom of a bear market. Because when them prices getting low, then you start seeing a trigger of money fluctuating into the markets. When the S&P euphoria starts kicking in, then obviously the crypto market starts kicking in, and that could again instigate another bull run. But I predict again the turn to the upside in about 3 to 6 months. Like I said, I've kept this on here just to reiterate it again. 2024, we could see the good times roll, but you don't want to wait till people are getting euphoric at the top. You want to be well positioned, well into your starting position, well before this. So that's why I'm saying in the next 3 to 6 months we could start seeing an upturn. So now is probably the right time to buy. But again, let me know what you think. Leave a comment. Let me know if you think I'm talking a load of BS, or this does sound a bit like what you were thinking of the crypto market. So when should we start to invest? Well, the short answer is now, last week, last month, as soon as it was literally a fire sale in the markets. Like I said, I've been investing now, dollar cost and averaging into my favorite top ones, then sub 10 million market cap ones for the last 3 months now. But there are some golden rules you must follow, especially if you're new to crypto and if you're new to investing, or you made a lot of mistakes in the last bull run and you want to avoid them. The golden rule number 1, which I think, is adopt a bigger picture perspective. Don't always look for the quick wins. A lot of people getting wrecked in crypto last time were following the main coins, and yes, high risk, high reward. And if you were lucky enough to get in them at the beginning, you did get pretty return, but majority of the people did get burned and did get conned. Always look at it is in the stock market or the trading market, and if you go onto these trading apps like the AIG index or eToro or anything like that, it says 70 to 78% of people lose money in the market, and this is by gambling on quick wins or get rich quick kind of quotas. So for me, don't look at the get rich quick. You will get burned. Look at the top performing altcoins for safety if you're new to the market, and look at the sub 10 million market cap alts for a bit of risk that you want to look to make a profit in, and also monitor them. So once you've invested in, still, even though you want to hold your bag, still monitor it every quarter. Don't keep looking at your portfolio, only monitor it every quarter or take profits every quarter like the pros. Rule number 2, don't look at your portfolio. Looking at your portfolio all the time just makes you make rash decisions. It makes you anxious. It brings on anxiety. And then you start making daft silly decisions because you've not got your kind of nerves of steel, or if you're a male trader, balls of steel, if you're a female trader, titties of steel, whatever you want to call it, you will obviously have a lot of emotional trading if you keep looking at your portfolio. So successful investing requires adopting a long-term perspective and nerves of steel, but frequently checking your portfolio, especially when it's down, will make it a lot harder on yourself. So do yourself a favor, control them emotions, become a professional trader in your own mind, not comparing yourself to any others. Don't compare yourself to the clowns on YouTube that are telling you they're making millions. They're not. They're making millions on your referral, and they're taking big risks and gambles. You've got to remember, these boys got in a long time ago when crypto was like it is now. They bought cheap, sold high, built a following, and cashed in on the following. So now that comes to rule number 3. Just keep buying. For me, I'll use any spare bit of income I've got. I genuinely believe in crypto, and if you genuinely believe in crypto, why would you stop buying? Any spare bit of income you've got, any, like I say here, bit of money that you find down the back of the sofa, in an old wallet, whatever it is, just keep buying. If you genuinely believe in crypto, as I do, now is a fire sale, and it's only by buying cheap at these levels that you're ever going to be super successful in crypto. Because when we start seeing the true 10, 20, 30 X's, it's only by buying crypto at the prices they are now. So buy the fire sale. Buy the dip. I know I spelt buy wrong there. I was rushing a little bit. I will put it, I've just seen it now. I will put BUY in there, change it before I send it out to anyone. But also buy the dippy dip. And I have put it there for some reason, blow my mind, but do forgive me for that. I know there's a lot of spelling police out there. But whenever you can, while the market is tanked, because this is how crypto pros get rich. And this is absolutely fundamental advice that I could give to anyone. Again, it's not financial advice, it's just me telling you how I do it. So again, do your own research, but look into how people do it and go successful. I can actually tell you, I won't go into super figures, but I did make in the hundreds of thousands on the last market. And I did predict it in a lot of my videos that it was going to crash around December time, maybe early year. So I was taking profits from November. I didn't take them at the top, but I did take enough to have a massive amount of money to invest in this bear market, which has stood me in good stead, and to invest in a massive new crypto project that will be, in my opinion, one of the most successful DeFi dApps out there. So where does that leave us now? Well, the conclusion is, unfortunately, suffering through the bear markets is the cost of being an investor. We have to do this. We have to sort of experience the lows, buy in the lows to enjoy the highs, and cash in the highs. You can't reap the benefits investing without paying the cost of doing these 3 things, which are the golden rules. I know that sounds simple in theory, and they are, but extremely hard to execute. Now, the bear market is here, so take a deep breath, broaden your perspective, and dollar cost average in whenever you've got spare money or you have found down the back of the sofa, like I said. And always do your own research and take this as my views only and how I do well in the markets, and by no means is it financial advice. So do look at this. Try it out. Maybe just try it with $5, $6. Get yourself in the market. Start getting yourself over that fear factor, over that euphoria. But remember, you have to follow these kind of golden guidelines to be anywhere near a good, successful trader. Don't go anywhere near leverage markets at the moment. Just look at being a long-term investor. If you feel like you've done enough research and training and you've got balls and nerves of steel, maybe look at leverage trading like I do on Bybit and stuff like that. But that's when you are mentally able to cover your losses. So a big thank you for watching this. This has come from Crypto OG, me, the channel. So please like, subscribe, hit that bell notification, and stay safe.